Hi traders and welcome to Pepperstone's Technical Analysis Market Wrap on Friday the 21st of August. So I've seen some good moves this week. The S&P 500 finally hit its all-time high. It took a little while to get there, but it's there now, and it certainly had a bit of an effect on some of the currency pairs. So we'll have a look at that, and we'll have a look at the dollar index and see what that's doing for the dollar-based pairs. So we'll start out with the Aussie USD as we always do. On the daily chart, we can see it's been tracking up the 20, so nothing changed much there, but it did hit a new recent high around that sort of 72, 76 area. So it's certainly had a bit of a go, but like we've said all along on this one, it's going to struggle to get much higher without finding resistance every 50 pips. So no surprises to see it get stuck around this zone here, and it's going to be a bit of a track up for it to get to the 73 cents because there is a bit of resistance in front of it on the bigger time frames. But look, for the smaller scalping opportunities, you can see it came back down to the 20 again. It's been a bonanza for scalping really because it has respected all of the technical levels. It's given us some really good opportunities to get in. It came back down, touched the 20 moving average on the daily, like I say. You can go back to a 1 hour chart and you can see here, even on the 1 hour, the 1 hour is probably where the real opportunities are for scalping this one, because you can see that it keeps coming back to the 20 and buying off it. So it gives you plenty of opportunities to enter the trends. But again, I've always said this has been a better scalping trade than more long-term predictions on this one because of the very nature of where the resistance is. So probably nothing's changed in that part really. Probably just keep scalping it. If we're going to take it long, we're going to want to see it probably get to these highs again. It'll have a bit of trouble breaking through, but there are certainly some opportunities for the smaller time frames to get up there. So probably just a watch and see on this one. Scalp the opportunities when they present, and it's got probably, we need to go to a 1 hour. Look, if it breaks, it needs to break down this 20 moving average and close below it on the daily before I'd start shorting this one. So until it does that, all the opportunities will be the long way on the scalp. But if we do get a close below the 20 on the daily chart, then we'll be looking to take it down to the 50 or to this role reversal area at around that 70-20 area. All right, we'll move on to the US dollar CAD. So we can see the engulfing bullish pattern here that we've got. It's certainly at a really strong level of role reversal. We know that we've got the support here, we've got the resistance over here. So we know this level has been respected. But what we need to see is a change of trend on a reasonable time frame to convince us it could go long. Now, the first place it's probably going to go is the 20 moving average on the daily. So at around that probably 133 flat area. But we'll take it to a 4 hour chart because this is where we need to see the switch. Okay, so we've got MACD rising. What we need to do is 4 hour close to get up here and close above this level here. So we need to close above the 132, probably 60 area. If we get that, we've got the lightning bolt effect. So we've got the low, the high, the higher low, and then we'll have a higher high confirmed. So that's the change of trend that we're looking for. And that should give us enough gas to get to the area on the daily, which is that 20 moving average. So that's around the 133. I'll pop a line on that here. So that's around this level here. Okay, that's the first stop, but more than likely what I'd be going for on this one is probably the 200 on the 4 hour. That's probably where it's going to find the most amount of resistance, because you can see that we've got these previous highs throughout here, and the 200 will be around that area as well. It's not really going to move much, obviously, because 5 or 6 candles is not going to change the projections of the 200 very much, but it will be in its way at that point. So that's where we're going for, around that sort of 133, call it sort of 80 area. So a pretty reasonable move. So we'll certainly get a decent amount of pips out of it, but we've got to wait for that change of trend in order to take that trade. All right, we'll go to the dollar index actually, because this is the one that's probably painting a pretty good picture of what may happen for the dollar-based pairs. You can see that we've got a very big engulfing candle here on the daily chart. Now we know this is also at support, long-term albeit, but it is there from way back here. It's the only support that it's got, those two levels there in recent time. So you're going to take that with a grain of salt because that's from several years ago now. But we're getting a pretty good rejection candle here on the weekly. You can see that that's a nice big rejection candle. The daily is telling that story. You can see here that we've got the engulfing bullish candle. So, the 200, it has not been able to close above the 200 for a long time now. You can see that not from there, and that was only a very small close. That was way back in June. Okay, so in order for us to go long and start to take this one seriously, we must get that close above this 20 moving average on the daily chart. Until it does that, it's not going to convince us. The pattern's good. No question about that, and it is a level where it could definitely reverse, but it needs to do it. Looking at it, it's not enough. The MACD is starting to rise, stochastics are going in the right direction, but we must get a close above that sort of 93, call it 60 area. If it gets close above there on the daily, I'd be pretty satisfied. Even though this level here is pretty strong, we need to close and break above this level. If it does that, it's going to bode very well for the US dollar base pairs. So until it does that, nothing doing here. I wouldn't short against an engulfing candle, so the shorting opportunities probably aren't there for it. But looking for the longs and looking this as a bit of a base for what we're going to see on the dollar base pairs. So the strength that we see in the dollar index is basically an inverse of what the EURUSD has done in the last couple of days. You can see this is the daily. The candles have almost reversed. We had a big sell-off candle from around that. It got to as high as sort of 119.60. So it was certainly pushing towards that 120. It was certainly trying. But that big candle pushed it down. It was a big day of selling, and it got it all the way down to that 118.33. So that was a pretty reasonable sell-off. It's found itself now, basically in that zone between that sort of 117 and 119 area. It doesn't excite me a lot. You've got to go to the smaller time frames to really identify any potential trading opportunities here. It's gone, it's found itself not even in the middle of the range, really. Like, it's found a little bit of support around this 50 moving average on the 4 hour, but nothing to write home about. This is probably more a scalping opportunity than anything else now, until it breaks through one of these key zones. It needs to either break the 117 good and proper with a daily candle, or it needs to break above the 119 with a daily candle as well. And until it does that, if it breaks down either way, you can probably aim for the 100 pips above it, because that's more than likely where it will go if you get that daily close. But you can see it's a little bit away from that. So you can go to a 4 hour chart, probably scalp the 1 hour in the same way. You can see the 200 on the 1 hour has caught this action, which is similar to the 50 on the 4 hour chart. So look for changes of trend. You can trade into the 119 level, or if it starts to short off from this level, maybe trade it into the 117. But really just follow the moving averages and take scalping opportunities on this one, because the long term is not really clear for us. So we want to see breaks on the daily to really solidify a long term move. So let's just take the short ones. Use the 20 as your base. You can see it's done a pretty good job there, and it can certainly do it again. If it starts to rise again, start taking the longs off the 20, or if it goes below the 20 and it starts to drop, take the shorts every time it pulls back into the 20, into the key zones. So just scalping opportunities on this one. So we'll move on to the pound Aussie. So this has been a pretty good one for scalping, and we were talking about this one last week, and it's certainly starting to play the game now. Last week it had that bullish engulfing candle in this area here, which was a roll reversal zone. Okay, so we can see that right off it. So it was a really, really good pattern. You can see it right there. It's had a big push up. Then we had that hammer candle. The 20 and the 50 moving average are about to cross on the daily. It really wants to cross. You can see the last time it crossed was way up there. So it's a pretty significant area. Now, it's certainly D-Day for it. This is the area that it's going to struggle. If it's going to have to get past this zone here. It's had a couple of cracks at it. You can see there. Failed to do so. It's been a big sustained move now, though. It's been a good couple of hundred pips off the low. If it gets a daily close above this level here, so we want to see basically, we need to see the 184 broken. The 184 has to break on a daily candle. If we get a daily close above the 184, that's going to pretty much confirm the cross that we can see here. MACD is certainly in its favor. This is a really good long-term trade. We've been talking about this for a little while now. The projections are easily to around that sort of 186, 187 area. So it's got 200 or 300 pips in it for the long side. It's very, very important key zone for it to break. It needs to break this level here. Yeah, again, the cross correlation that we're doing here is, we know the pound has got more blue sky than the Aussie USD at the moment. The Aussie USD, like I said earlier, has trouble every 50 pips all the way up to about 75 cents. Whereas the pound USD, if you're just looking at those two in comparison, has probably 200 or 300 pips of pretty blue sky in front of it without any serious resistance. So yeah, it stands to reason that the pound should be stronger than the Aussie if they both go long. And if they do both go long, the pound should go longer than the Aussie, which would see this one strengthen up and hopefully get to the levels that we need to. But in order to take this trade, we obviously want to see the break of this. It is very, very important that the daily, I know a lot of people have been trading the scalps up here. It's given us about 7 opportunities to get 100 pips every time. It's been fantastic, but it is definitely the time now for it to actually go on with the business, close above above the 184 on a daily to prove that it is going longer, and then it's going to have a lot of things in its favor. It's going to have the MACD entering back into the histogram. It's going to have the 2050 cross on the daily, which is obviously important, and all bodes well for it, but it must actually get the job done for us, and hopefully it will this time around. All right, we'll jump into the US dollar yen. We'll have a look at this one because it's basically, the dollar pairs are all pretty important today. So we can see we've had a couple of, we've had a really strong day here in the middle of the week. You can see that, it looked like it was going to short down to this level at around the 104 sort of 60, but it didn't get there. This reversed it, but it smack bang into the 20 moving average. You can see it's held up a pretty strong level of resistance all the way through. Now, look what it does from here. I'm not a big fan of this one because it's kind of in the middle of nowhere. It could probably short to the 104 just as easily as it could long to the 107. So, yeah, without any real clear direction, you've got to go to the smaller time frames to try and isolate a trade. With this one, we've got our zones up here, so they're very clear cut. What I want to see here is either a change of trend on the 1 hour at the very least. Probably want to see a series of higher highs and higher lows, and then we can aim it to the 107, which would be fine. Yeah, that's about 120 pips away from here, which is pretty good. Or we get a bit of a pullback on the 1 hour and then maybe continue the selling down. So we know that the 20 could provide a reasonable amount of resistance for it. It has done so in the past. So if it does continue to sell off from this point here and comes back and retests the 20 from the bottom, we can probably send it down to the 104 sort of 60 area again. So it's roughly 100 pips away from where it is here. It might be another 20 or 30 pips before you even get in. So it is really a scalping opportunity. I'm not really keen on longing this one for a reasonable amount of time, mainly because it's a little bit confused. But there's certainly some scalping opportunities inside these big zones. They are a pretty big zone here, about 250 pips. So yeah, definitely a shorting opportunity if it comes down and comes up again and tests the 20 from the bottom. We'll short it down to the 104.60. Or indeed, if it turns around and starts printing higher highs and higher lows, we can aim for the 107. But yeah, purely scalping opportunities on this one. All right, the last one we'll have a look at is the S&P 500, the one everybody's been talking about. You can see that it finally hit the highs that it did prior to the pandemic. So it's taken a long time to get there. It's been a bit of a grind, but this is a weekly chart. It's been very, very strong weekly movements all the way through. It's taken about 8 weeks to get there, but here it is. We'll go to the daily. You can see the daily really shows the grind over the last probably 3 weeks. It's been a real grind up, slowly but surely. It made its way up there. To look what we do from here, it's a pretty tough situation really, because it's at all-time highs. Everyone wants to short it, and everybody's been trying to with I guess not a great deal of success, especially if you've been doing it for the last few weeks. If it's going to go short, it's going to go short from here because it's obviously reached that target that it's been aiming for a very long time. That's not to say that it's going to. I'm still looking for changes of trend on the smaller time frames to convince us that it will take off these highs and actually start to sell down. So the logical level it would get to is probably that 32.30. That's probably where it would aim for. That's the role reversal. If we take it back out to a daily chart, you can see why. You can see that the that area there was support. It was resistance there, and it was a bit of support again there. So if it's going to go anywhere, that's probably where it's going to gravitate to. The stochastics has already started to sell down, but again, you got to treat them with a little bit of caution. Sometimes when they reach all-time highs, the obvious move isn't actually always the one that plays out. Like a lot of people are going to expect that it's going to just sell off there automatically. It may not do that. Sometimes they just push it higher. And who knows where it can go. So just be really careful around this one. Make sure your stops are normal. Don't try and put ridiculous stops in because you think it's at an all-time high. It can't go any higher, and probably just aim into the key levels. When you're going up, just trade on the really small time frames. Make sure that all the technicals are playing out for you. But the preferred trade here is obviously down to the level that we know and love, which is that role reversal at around the 32.30. So I hope everybody's had a great week's trading. We've had some really good opportunities this week, so hopefully you caught some of those good technical setups, and it looks like we're going to have some pretty good action next week. We've got some key levels that look like they're about to be tested or broken in the coming hours or early next week. Have a great weekend, everyone.